Hey traders, welcome back. Today is the week of March the 27th, 2023. This is our weekly trading market analyses preview and our past week's performance overview. Okay, my friends, let's go ahead and jump into it. Just a quick FYI for you. I'm coming to you from California for the next couple of weeks. We're out here visiting my daughter and my granddaughter. And so just going to be a little bit discombobulated this week as I just work off of my laptop. In fact, I was just realizing that I do not have my stylus here with me to be able to mark up my chart. So I'm going to be giving you some of my support resistance levels here this week just verbally. So I apologize for that. And I apologize for working off my laptop and no camera feed for me today because I don't have a place really to do that very efficiently. But let's go ahead and jump into the trading week. It is a very, very interesting setup here. We, again, tend to look at the daily technicals in our trading room as we trade throughout the day each day. But for this purpose, we tend to pull back a little bit, look at the weekly technical indicators, and you can see that we have what I like to refer to, or what I call as the dreaded neutral rating. I just absolutely abhor this rating. It is incredibly tricky to trade this neutral rating when it appears on a daily basis. And of course, we did have that last week, one of the days. And it was, in fact, a very tough day for us to trade. It worked out okay for us, but it was a lot of work. And the point, I guess, that I always make with this is that the market sort of, I believe, abhors a vacuum. And it doesn't, of course, really care if it's going down or up, but it does like trends. And this is not a trend right now. This is a transition period here on a weekly basis. You can see that there's just sort of a mixed bag all across the table here with regards to whether we've got buy or sell signals. Now, this is going to work itself out. The market doesn't usually stay in a neutral rating for very long. But just be aware that I think this does indicate that we are in a transition period. And as you go forward, it's always good to trade small, I believe, in those types of periods. Now, we look at the overall marketplace. We look at the E-minis. We look at key support and resistance levels here. And I will have to say that almost everything, by and large, looks fairly bullish here. If you look at some of the things that I'm looking at, most of our technical indicators here are pointing up and giving us a buy signal. We are above this, what I like to call the cliff. We are above this level right here at 38.40. That's the black line. The gray line right here, that's our VWAP. We're above VWAP. The red line right here, that's our point of control. That's where the biggest chunk of open interest contracts lies, and we're above that. You can see that we've also been trending up here fairly decent amount, pretty almost linearly straight up there over the last week and a half. And last but not least, this big red line right here, that's the 200-day moving average, and we're above the 200-day moving average as well. So from a technical perspective, it certainly does look bullish here in this last sort of week and a half's trend formation, trend setup. However, I guess you could also make the case, if you go back a little bit further here, you know, we're at the same level that we were last summer. Nothing has really changed. We've been trading in a range, albeit it has been a very, very large range. But yeah, we're at no different a price level now than we were back in May of last year. And so again, eventually at some point, I do believe that we're going to break out of this trading range. But so far, we've been pretty much stuck in this trend line. You know, if we could get all the way up here to maybe 4,300, or maybe push back down below what I call the cliff at 38.40, we might see some traction one way or the other. But for right now, we're really in just a very, very, very large chop zone. And it doesn't look like at this point this week that we've got any major news catalysts that are at least pre-planned that could potentially drive us out of here. But for the short term, we are absolutely in a bullish trend. And I think that we'll probably see that neutral rating resolve itself here, possibly to the upside, possibly to the bullish trend here over the next couple of days. We pull in a little closer to the 2-hour candles, and this is what we trade off of every day in our trading room. This is where we set our levels. And again, I apologize for not having my stylus with me here to write down some of my levels. So I'll give them to you verbally, and you can try to write them down as best you can. Again, you can see, again, this is a 2-hour chart, and we've been pretty much trending higher here ever since, really this bottoming area down here in the middle of March. We sort of bottomed out here a couple times. We had what you would, I think, call a double bottom down here, and we've been pushing higher and higher here, but also starting to hit some resistance where we're currently sitting right now today. So again, I think today is going to be an interesting day. 40-30 has kind of been a decent area of resistance, going all the way back to maybe February 22nd. And so let's see what it does with it here over the next couple of days. But again, the trend has lately been to the upside. So on the upside, looking to the upside here for today, or what we would call resistance, I'm looking at 40-30, which is basically, as I put this video together for you here this Monday morning, that's where we're sitting right now, is 40-30. And then above that would be 40-43, 40-74, and that was last Wednesday's high. 40.74 was last Wednesday's high right in here. That's a big number. 40.82 above that, and then 4100. 4100 right up in here would be a very big level for the bulls if they could break above that. On the downside, for support levels, 4008. 4008 would be the first level I would look at, and then 39.94, 39.73, 39.58, and then last but not least would be that 39.40 level. So those are my levels for today, folks. That's what we're going to be working off of ourselves here inside of the trading room as we get started trading today. We look at sort of a matrix of the overall market, the SPYs and the Qs, the IWM and the DIAs. And I guess the biggest thing of note is that, number one, the SPYs and the Qs are solidly now, again, above that 200-day moving average. The IWM really got beat up with these interest rate sensitive and these regional bank stocks. That's really been underperforming overall. And the DIA is just hanging in there. It's just almost trying to cling very, I think, desperately right now to that 200-day moving average. And then the other thing that I would note as well is just the massive outperformance of the Qs, of the NASDAQ. The technologies have just been absolutely on a tear this year. We look at that in a little bit easier, I guess, visualized manner, and you can see what I'm talking about here. There's the Qs year to date, up almost 18% on the year, just absolutely ripping. While you have the diamonds, you have the Dow and the Russell, both in negative territory once again this year. They finished down last year. They're looking to head down this year as well. And the SPY is hanging in there at 3.9%. Although I will tell you very quickly that our ATM program, our asymmetric trade management, asset allocation, passive portfolio model is trouncing the market once again here. But it is, again, the story of the day that there's just this huge divergence. And we are setting up, just an FYI for you, we're setting up this week for a new pairs trade. And it's probably going to be something along the lines of maybe going long the IWM and going short the Qs. Just something to think about, something to take a look at. We look at sector rotation. We look at the heat map here, and you can see really this was 2 weeks ago. This was last week right here. So we are starting to get a little bit more green on the charts, and you are starting to see that other than maybe the commercial cyclicals this past week, really had a lot of green across the board. Of course, the financials still getting hit pretty darn hard here. And we've dipped our toe into the water here a little bit with the financials. But I do think that this regional bank issue that, of course, has been dominating the market news as of late, I think that's going to be one of our big areas as we look to opportunities to build trades with over the next few coming weeks. I don't know when that's going to be. It's always hard to try to figure out how to catch a falling knife. And so we would rather just let the knife fall and potentially give up a little bit of the profit potential to have a little bit more certainty that there is an actual rebound taking place. We look at those major indices again, and this again was 2 weeks ago down here. This was last week right here. And I think, again, probably more than anything, you look at that massive divergence 2 weeks ago. But it's, continues here as the Qs outperform pretty much everything across the board. And I think, again, it makes note of the importance that we try to stress every day in our trading room, which is we trade all of these indices. And we trade them with disparate strategies. We trade the Qs and the SPYs with a similar strategy, but we play them off of each other many times to where one is hedging the other. We have a completely different strategy for the IWM, and we have a completely different strategy for the DIA. And all of those combined tends to smooth out your portfolio quite a bit. We look at the put-call ratio. It just gives us market sentiment. It determines whether the market is bullish or bearish. And we're still in this bearish sort of phase. We're pretty much across the board, however you want to look at it, especially the CBOE, which is what I tend to look at more than anything regardless. We're still seeing a lot of put activity and a lot of sort of focus on protecting to the downside. So it doesn't seem to feel like the market has a lot of faith right now in this market. You look at some of the open interest areas of where most of the contracts lie, and again, you can see that the red versus the green, there is tending to be a lot more put activity here than call activity. And of course, the major wall still sits just above that 4,000 level. And that's a real key area for us as we continue to watch the market. You can see the expected move in the marketplace last week. Obviously, we had quite a bit of activity, catalysts news-wise. This week, we don't really have a lot on the agenda. So we're back down to a lower expected move in the marketplace. We'll have to see how that, of course, pans out. Fear Greed Index, we look at that as a sentiment reading as well. It takes a lot of these information pieces into account. And you can see where we're at on the fear greed. Same thing, really, as we were last week. Same thing as we were a week ago. Not too big of a difference here. Again, we're looking for extremes. We're looking for extreme greed, extreme fear. And again, it's a contrarian indicator. So when we have extreme fear, that's when we want to just sort of hold our nose and jump in and buy. And when we have, conversely, extreme greed, that's probably, when everything's going up and everything's green and you're making more money than you ever realized you could ever make day after day after day, that's probably the time to get out of the marketplace. Potential market movers for this week. Again, I said that this week is fairly light on the agenda. Not much on the agenda to talk about for today. On Monday, tomorrow, Tuesday, we have ECB's Lagarde speaking, as well as Fed Barr. He speaks pretty much all week long. Wednesday, we've got oil inventory numbers out. We do have an oil trade that we're trading. So that's always important numbers for us. Jobless claims, GDP numbers, nat gas. We have a nat gas trade that is expiring for us this week, so that's important for us as well. More Fed talk, and Janet Yellen will be speaking throughout the day on Thursday. So those could potentially be market-moving news items. UK's GDP as well as Canadian GDP is out on Friday. U.S. consumer spending and the U.S. Michigan sentiment reading is going to be out. Spelled correctly, incorrectly. That usually does not make a market move, but yeah, it's a catalyst. It could potentially give us something. We look at our updated performance results in our model portfolio over last week, and it updates for the year to date. And of course, we start off with our 0 DTE. That's the main focus that we have in our trading room. We've had 59 total trading days of opportunities this year, and we have done 92 total trades. This has just been absolutely one of the strangest years, but a very pleasant year for us with regards to our zero DTEs. We plan on making one zero DTE trade a day. So we should, by all intent and measure, have about 59 total trades here out of 59 total trading day opportunities. In fact, it would be not unsurprising to see, 59 total trading days here and maybe 52 total trades, because there might be some days that we just go ahead and skip. But this year, we have been able to garner some amazing premium later in the day with the NDX. Now, again, the NDX is a tough one to trade, but it has sure been good to us this year. In my model portfolio, which is about $100,000, this past month, and again, obviously, we still have a few days left in this month, but this month of March, I've been able to put about very close to $13,000 of income into that account just off of the NDX zero DTs. It's not our bread and butter SPX trades. It's just the additional NDX trades. But we've done 92 total trades. 90 of them have been winners. 2 have been losers. About a 98% win rate. I don't know that you get much better than that, guys. It really has been a stellar year for us with regards to that. Our 4 DTE trades, we took 2 more losers this week that we could have pulled for a profit. We were able to reapply those and get a profit back on them, but it wasn't enough profit to wipe out the losses that we took. So we're up to now to 26 wins and 3 losses on our 4 DTEs. It was a tough week for us last week on our 4 DTE trades. The IWM Millionaire Maker trade, I just love this trade. We have moved again to a more dynamic approach to building this trade out, meaning that we do adjust it for enhanced income potential. That's great, but enhancing it for greater income potential also means that we're going to end up with some rolls. And we certainly did that last week. We rolled it a couple of times. And that's why if you looked at our performance results on the IWM Millionaire Maker from last year, we really didn't have many more trades than we had weeks to trade it in, because it is a weekly trade. But you're going to see these numbers start to separate quite a bit, I believe, this year as we do roll and adjust these more often. But our goal was to bring in about 15 to 30% more income on this trade than we had been bringing in previously. And so far, so good. That has been spot on. So far this year, we've done 17 total trades. All of them have been winners. That is such a solid trade. Our pairs trades, we added a couple new pairs trades, and we booked 1 winner on that. But we do still have 3 pairs trades working. And again, we'll probably be adding at least 1, if not more, pairs trades to our model portfolio here this week. That's been such a great trade. It's an easy trade to set up and scale into. It takes very, very little buying power to do these trades. They average, or ours at least, have averaged between about 2 and 10% return. And, that comes in over a week or so, all the way out to maybe 2 months. So they've been solid trades. They've been solid winners. Obviously, they've been very consistent. We didn't have a single losing pair trade all of last year. And we're, obviously starting pretty strongly out of the gate right now. And they come at a decent rate of returns. Sometimes you can have a high expectancy trade, but the return is not anything to write home about. But that's not been the case with our pairs trades. Bear market strategies, we had 1 more bear market strategy that we booked a winner on. So we're up to 8 winners now and 0 losers in that category this year. The stock market Millionaire Maker trade, same sort of approach and strategy that we use with the IWM, but we do that on stocks instead of indices. And we're using 2 right now. We're using PayPal and we're using Netflix. We've had to adjust Netflix a couple of times here in the last week to try to stay ahead of some of this crazy movement that it's had. But so far, so good on that. We've done 20 total trades. All of them have been winners so far. We've been able to roll everything that we did roll at a credit, and we haven't booked any losses there as of yet. That's a great trade for us as well. You know, the IWM trade, we're trying now. We've moved it up from about 1% a week target income goal to about 1.2, 1.3, and we're right on track with that. So we're very, very pleased with that. But our stock market millionaire maker, while it is, again, much tougher to trade than the IWM millionaire maker, we're looking at closer to 5% a week on these trades. So it's been right on track so far. So far, so good on those trades. Our positive Vega DIA ladders, we added a couple more to those this past week. And generally, we only put these on every other week, but we are shy one ladder right now. We only have 2 ladders working. We like to have 3 simultaneously working. So we'll probably add another one to this mix this week in our live trading room. We've done 12 so far this year. All of them have been winners. It's been absolutely fantastic for us. Scalping was definitely a mixed bag for me this past week. Tuesday was I think honestly Tuesday was a tougher day than Thursday. I'm kind of amazed in hindsight that I was able to even pull out $400 of profit on Tuesday's scalping session. It was a tough day. And then Thursday, I don't think it really was a tough day. I just never got on the right side of my scalps. I just, when I should have been buying, I was shorting. When I should have been shorting, I was buying. So just never got it going on Thursday. But that's kind of how scalping goes. And we've had a really, really, really strong run lately in scalping. And so I was probably due for a bad day. Our dragonflies, we added another one here this past week, and that's back on Boeing. BA is the ticker there. We've been shooting for roughly about a 10% return in a 2 to 3 week period. And so far, so good. Every one of those has been a winner so far. And again, we've got a new one up and running, and that one looks pretty solid also. Our Theta Fairy trades, we're up to 57 total trades that we've taken. 56 are winners. We just booked our profit once again here this morning as I was preparing this video to start this week off. What do you say about this trade? I don't know that there are a lot of trading services or programs that you can be a part of where they say, listen, we've got a whole ton of trades. We've got a dozen plus trades that we do consistently in our trading room, strategies, setups, whatever you want to call them. But just one of the trades, just this trade alone, has a really, really, really good chance of adding $20,000, $25,000 a year of income to your portfolio while you sleep at night. That, again, there's no guarantees in the marketplace, but that's what we've been experiencing. Is a $20,000 to $25,000 yearly income just off of this one singular trade right here. Our gold ladders are actually looking really good right now. We've only had one losing roll in our entire time trading the gold ladders, but we've also not been very successful at getting these ladders to the finish line, meaning getting them to expiration. And that's what we need to have happen. However, pretty excited about our gold ladder strategy now because we are enhancing it a little bit with some put credit spreads right now that is helping the income by quite a bit, actually to the tune of about 32 to 36% a year. So, excuse me, adding 32 to 36% a year income to this trade, it doesn't necessarily mean that it's going to get us into the profit zone that we desire because it has to make up for some of the trades that are not producing for us right now in there. But I think we would all take it. I think we would all take an extra 32% a year. So I'm pretty excited now to see how our gold trade works out going forward. Overnight vampire trade, again, we get these once a month. We've had 2 winners and 1 losers. And honestly, that loser was our fault. It really was. We were in a very nice profitable position. We probably should have booked it, but we were greedy and we let it run overnight when we probably shouldn't have. the profit was there for us to take. Let's put it that way. Our oil ladders, we took another loser here this week on our oil ladders. Oil has been really getting hit pretty hard here lately, and we did take another loser there on that in order to readjust these trades. All of all our ladder trades, though, the oil ladder is the one that has the highest potential profit, and so I'm still pretty happy with what I think our year-end performance could be with this trade, just based on the ROI potential of the trade. In the money cover trades, we added a couple more, and those have just, well, they've been money. I don't know what else to say. It is one of, I think, the best trades a trader can put on. I think this is one of what I would call the smartest trades that a trader can put on, is the in the money trade, and it's just been fabulous for us. Broken wing butterfly ladders, we haven't put any more on, and we need to work on a couple of those, but I'd like to see some market direction. I'd like to see us break out of this neutral zone and either push higher or push lower. That would give me a little bit better visibility on putting a broken wing butterfly back on. Our short portfolio continues to perform just amazing. This is a portfolio that we built inside of my teenage son's account, and this is his personal numbers, his personal account. We're up to about 3,200. We added about $500-$600 more buying power to the trade over the last week, and we're up about 24% year to date right now on our short portfolio. The XSP portfolio, this is our butterfly portfolio. We took two more losers this past week as we were preparing. We put them on for the FOMC day, and neither one of them ended up hitting. So we're now up to a position of break even where I put $90 into this trade. We spent about $10 on each one of these, and we just haven't had one hit yet. They do have, excuse me, they do have a pretty darn good potential if they can hit. We only need one or two of them to hit. And the only thing that this $90 that I've put into these 9 trades, it comes out of our profits from these trades over here. So we never ever put any of our actual principal into these accounts. So you can never actually lose any of your own money. You're just putting profits in here. Our ATM program, our asymmetric trading method, again, we trounced the market in 21 and 22. And I'm going to go ahead and say we're trouncing it in 23 as well. It's been rocky this year, but we are up about 6.3% year to date versus 3.9% of the marketplace. I'll take it. I think it's a pretty solid start to the year. If you would like to come trade with us, we'd love to have you. You can go to tryzerodteforfree.com and come trade live with us for free for 7 days. Interact with us, talk with our members, and get an idea of why we feel like this is the highest value trading room online today. If you like what you see, you want to sign up for a 1-month subscription to try it out, and you go through our 4 hours of training. You go through the hand holding that I provide you. You go through and commit to doing our one-on-one Zoom session where I will interact with you personally and talk about asset allocation and find what your trading weaknesses are and what you're looking to accomplish. If you do all of that and you're still at the end of the first month like, nah, I don't think Scott's right. I don't think it is the highest value-oriented trading room online today, I'll give you double your money back. So there's no risk in coming and trading with us. If you want to take a look at our asset allocation model, our portfolio model, our investing passive approach to putting your money to work, you can go to tryastforfree.com, and that is, again, the passive portfolio model that we use that has just been trouncing the market for the last 3 years. If you want to come scalp with us on Tuesdays and Thursdays, our goal again is to bring in $500 to $1,000 a day trading the E-minis. You can go to tryscalpingnow.com. And last but not least, guys, thanks again. I appreciate you guys. I love the ability that I can do things like this, go out for 2 weeks to California, hang out with my daughter and my granddaughter, spend time with her, and still be able to trade. You know, if you got a laptop, you got a Wi-Fi connection, you can do it. And grateful that all of you are part of this and trading with me. I hope you all have a great trading week. And for those of you that are trading with us, I'll see you in the trading room here shortly. Take care.